Banking Beyond Tomorrow, an annual banking conference by Bank of Baroda.
Bank of Baroda, one of India's leading public sector banks, organized the first edition of its annual banking conference, with the theme being Banking Beyond Tomorrow. The event kicked off with an auspicious lamp lighting ceremony by Sri Shakti Kanta Das, Governor, Reserve Bank of India. With over 20 eminent speakers from within the banking and financial services industry and outside, the full-day conference featured several stimulating and thought-provoking panel discussions. The theme of the first session was Banking Beyond Tomorrow, which covered the need for creating end-to-end digital products and other subjects such as KYC compliance and customer safety.
Let me just begin in that case with Mrs. Bhattacharya. So there's no doubt about the fact that technology is the basic building block for banks. But it's also true that technology is no longer owned in any appreciable measure by banks. Now, does it mean to some extent that in a medium-term perspective at least, that technology is not really something which we talk in terms of comparative advantage, at least among the leading cohort, and more in terms of how you can maximize the value of your business?
If you look at the ecosystem today, it is predicted that we will have 3.8 billion people across the world who will be using digital banking services by 2024. Now, when you are looking at an ecosystem like that, there is no way that you can feel that technology is not part of banking. In fact, technology for every single industry, not alone banking, it's like your spine, and unless and until you sort of bring it in as part of the activities that you do, you are not simply in a position to give your people, that is your customers, the experience that they want or deserve. Every business has its own business model that they must pursue, and technology on the other hand is on such a swift evolution that if you concentrate on that, you will lose your focus on your main business activity. So what is really required is a collaborative approach, as you said, partners, and that is your theme for this session. So that's what you need to do. You need to collaborate with technology as your backbone, with various people in the ecosystem in order to bring the best products for your customers and ensure that you are literally leveraging what you have, that you are unlocking it, you are unpacking it to give the best possible insights to your employees so that every customer interaction is a fruitful interaction.
Technology, as we know, as Madam said, is an enabler, but it can also offer potential for disruption. So Ashish has issued a report that talks of two sources of disruption in particular, digital banks and open banking, and goes on to identify open banking as a key threat to incumbents, drawing upon the experience of other Asian countries. So Ashish, can you just walk us through your thought process?
I think technology, as ma'am said, is the biggest enabler, right? It's an enabler for banks, but it is also a very big threat, not just because what technology companies will do, but what other banks will do. But really what is the key is how the organization can be flexible enough, be adaptive enough to that change and re-engineer itself, right? And that is what will define success. The other big issue has always been that it is not the assets which are daily value creator, but it is the knowledge of the customer which is the value creator. With open banking, I think that barrier has broken down. Now that information can be sourced by others, with some digital public goods like account aggregator coming in, the access to information not just about your bank account but your mutual fund, of course with the consent of the individual customer, is accessible to any financial service provider.
Coming to Deep, I think Deep really represents two important aspects where banks have actually interacted with partners. One is private equity firms, which have become more and more important as part of the landscape. The other part, of course, is that Macquarie has been a consistent player in the infrastructure sector. What are the other sectors that you see that might be ripe again in terms of reasonable risk-return equation and which would become equally an area of focus for banks, without again taking on your balance sheet risks which you actually cannot bear, as which happened the last time around?
Two other areas where we see a lot of interest, but also, as you said, risk return adjusted capital coming in. One is we're talking about a lot about technology here, and obviously infrastructure naturally legacy wise has not been too much of an investment into technology, but that has also meant that there are opportunities which are coming up, and what we've done over the last 12 months or 24 months in Asia Pac is an indication. We've bought data center businesses, we've bought telecom tower businesses, we've bought fiber businesses, undersea cable businesses, bought broadband businesses. So, so it's been a one sector where we definitely see there would be set of opportunities in the next 5 years, I would say. So that's one area. The other one is, it sounds like, I'm going to repeat this when people talk about, green infrastructure. I would say that just the energy entire supply or the energy chain plus the digital infrastructure, which seems like, I'm kind of stating the obvious, but it requires a lot of work. I mean, reality is we haven't invested as a fund house in renewables and digital infra over the last 2 years that I've had capital to invest, because we find things expensive and sometimes difficult to understand. But you need to spend that much time and energy if you want to be a little ahead of the curve.
Mr. Shah's interest spanned entire gamut of debt and equity. But let us begin again by talking about the NBFC business, which is one business with which banks have been associated the longest and in many ways. So my question to Mr. Shah is that, is it really the end of history, or does he believe that picture abhi baki hai and there's a lot of evolution in the sector which is there?
I think the long-term model, given that the savings franchise is with banks, and it should be with banks, because that's the most important one, that you want to protect, you want to make sure the household savings are safe, and India has done a great job at that. I think NBFCs can focus a lot more on innovation, on being closer to customers. Like, for example, the new to credit market, whether it's MFIs or housing finance companies, have been able to innovate a lot more on that. I think with information opening up, technology coming in, we are actually moving in credit also from a very product-centric world to a customer-centric world. I think we are moving to really an area where understanding customer needs, designing product, there is a lot of innovation that can happen, that is required. Customers are asking for it, and the moment they have a choice, I think it will become also another differentiator there. So I think NBFCs can focus a lot more on that rather than try to be competitors to banks.
The first session was followed by a special address by the MD and CEO of National Payments Corporation of India, Dilip Aspe.
Any developed economy is near, either it's in single digit of the cash to cash in circulation to GDP ratio, or near that single digit, right? The closer to the 10 mark, right? And I strongly believe that next 5 years, knowing that the affinity of cash to such a large diverse population at different education and awareness levels, I think we should, it's a great target to have, to aspire to have at least a single digit or a closer to the single digit cash in circulation to GDP ratio.
Banking beyond tomorrow.